Now that we've talked about and looked at what's happening with supplies and production of soybeans, both throughout the United States and here in Louisiana, the next thing to look at is to look at the supply and demand dynamics for the soybean markets. We've already looked at the supply side through the production. Now we can start looking at the demand side and see how these soybeans that we produce in a particular year are used up, and that interaction between supply and demand and how that impacts what prices we see for our commodities. You look at total soybean supplies being primarily a function of annual production and some other commodities that we grow here in Louisiana. Imports can make up a significant component or proportion of all the supplies that we have in a given year for that commodity. It really is not the case in soybeans production or in the soybean market. You look at imports, imports historically make up less than 0.5% of our total supplies. So when we look at the total supplies of soybeans that we have to market here in the United States, the vast majority of them are going to come from the crop that we're planting or the crop that we're growing. Historically, about 3 to 6% of our total supplies are carryover stocks, or stocks that are supplies of soybeans that we had left over from the previous year. So when you look at it, the vast majority of our supplies that we're going to sell or be able to sell in a marketing year is going to be a function of the size of that crop in that given year. When you look at the demand side of the equation, we've got two really broad categories for demand use for soybeans here in the United States. One being domestic crush, and in that what we're doing is we're producing some of the products of soybeans, the soybean meal, the soybean oil, and the soybean hulls. Those are used for a variety of different uses. And the other major category, or the main category that we have, is exports. And that has become increasingly important over the last several years, as not only soybeans, but most of our agricultural commodities become more global in nature. When you look at and take those two sides of the equations together, supply and demand, what we have left over after we've used up the soybeans that we're going to use in a marketing year, what we have left over of that initial supply is what we call ending stocks. And ending stocks are basically a very good indication of the supply and demand balance that we have for that market. As ending stocks rise, that means we have a lot more supply than we have demand. And when we have more supply than we have demand, that can impact and put downward pressure on prices. Conversely, when ending stocks are falling, that relates to demand being very, very strong with little or manageable supply levels. So as ending stocks fall, that means that demand is growing higher than the supplies are growing. And when we have ending stocks that are falling, that's generally associated with a much stronger prices that we see, much stronger prices that our producers can receive from the buyers. Each and every month, the USDA puts out a supply and demand estimates for soybeans and all the other major row crop commodities that we grow here in the United States. It is their projection, is their snapshot, their projection of what the supply and demand dynamics will be at the end of the marketing year for that particular commodity. For soybeans, our marketing year begins on October 1st and ends on September 30th. So it's quite a bit different than the calendar year. It's more in line with when the majority of our soybeans will be harvested here in the United States. So when we look at and talk about marketing year, know that we're talking about quite a bit different situation than when we think of the typical calendar year. But each and every month the USDA puts out these projections. It's going to give a projection for supplies. These numbers can and often do change from month to month. These changes often impact the market pretty substantially, particularly if the USDA makes some changes that really were very much different than what the market had anticipated them doing. So when you look at these supply and demand reports that USDA puts out, they can have a huge impact on both the direction and the direction of prices, as well as the impact of what those prices may be due to acreages in coming years. When they're going to put projections out, they're going to talk about supplies. So when you look here, this is an example from September 2013. They have an estimate of total supply. They'll have estimate of domestic crush, exports, and total use. And then they'll have an estimate of ending stocks, which again, as I mentioned earlier, is a signal of how strong demand is in that marketing year relative to the amount of supplies of soybeans that we have in that marketing year. And you can see here, just looking at those ending stock numbers from the 5-year average versus last year versus our current marketing year, and you can see as that ending stock number has gotten a little bit bigger, when you look at those three columns, we see the price, the average price received also changes. So at 160 million bushel ending stock level for our 5-year average, we have a 5-year average price, market price, or price to the producer of about $11.55. In 2012-13, that ending stock number got very, very tight at 125 million bushels. And you can see we saw a significant increase in price as those ending stocks got lower and more tight, and the available supplies to market became tighter in our markets, in our marketplace. So just as a point of reference, these supply and demand numbers do give us an indication of where the supply and dynamics are moving in that marketing year, and also provide a basis for where we may see prices move in the future. This is a breakdown in terms of U.S. soybean demand by the 3 major categories that we have. And you can see here, soybean crush and export demand are the primary sources of soybean demand in the United States. Soybean crush has about 55% on average of total U.S. soybean use is kept here in the United States, crushed here domestically, and then the products that they make from that process, soybean meal, soybean oil, and soybean hull, are sold on the market. About 41% on average are exported. And again, those are whole soybeans that are exported into the world market. And again, that number has become increasingly important over the last 10 to 15 years. 20 years ago, that export number was probably more in the line of about 20% of total U.S. demand. Now we see that that number has climbed up into the 40% region, and with global demand increasing, we could see that number improve or get higher as we move forward. The remaining category there is residual use. It's actually residual and seed use, and those are kind of a catch-all category for USDA, and that's generally runs in the neighborhood of about 4%. Because exports have become a pretty important component of our total soybean demand, and again, as demand has grown, we have seen prices for soybeans improve, and that has certainly helped, along with the improvement in soybean yields and soybean productivity, has improved the profitability of soybean production over the last several years. Exports are very, very important to the soybean market. Here this table provides a top 10 list of our top 10 customers during the 2012-13 marketing year. And really, if you go back over the last 5 to 10 years, these 10 countries would somewhere be in that 1 to 15 ranking level in terms of our top 10 to 15 customers. So even though we're looking at a snapshot of 1 year, these countries would certainly hold true if we looked at a more historical look of our export customers. The one thing that you can look here and see is that in 2012-13, those top 10 countries represented about 90% of all our soybean exports. So we've got a lot more countries that we're exporting soybeans to, but really and truly, these are the ones that drive our export demand on a year-in, year-out basis. And more specifically, if you look at China, about 60% of the total soybeans that we sold in 2012-13 went to China alone. Their increase in demand for soybeans and oilseeds has grown tremendously over the last several years. They continue to be a huge customer and will likely be a large customer this year, next year, and for many years to come.